From Kansas State University, this is Agriculture Today. Eric Atkinson with you. And ahead today, K-State's Dan O'Brien will talk about another good week for the wheat market and so-so week for the feed grain and oilseed markets. Dan will remark on whether the markets in general have hit a ceiling during his weekly observations on the grain market trends. Then a guest speaker at K-State's 2021 Swine Day yesterday. From Iowa State University, Rodger Main will talk about the new pilot project he's leading to develop a U.S. Swine Health Improvement Plan for assuring that U.S. pork remains free of problematic diseases. And further ahead, K-State's Chip Redmond on Kansas agricultural weather. All that straight ahead on this Agriculture Today. You are tuned in to the K-State Radio Network and Agriculture Today. Welcome once more to the grain markets and the latest happening, particularly on the wheat trade. Now, Dan O'Brien is with us from his office in Colby in northwest Kansas, grain market economist, K-State Research and Extension. Wheat still climbing that ladder, Dan. It's been on a bullish trek for some time now, and it's all yet about limited supplies, isn't it?
Yes, in the world overall and in the U.S. Of course, the U.S. supply-demand balance sheet at just around 30% stock, 30 or below percent stocks to use with last USDA WASDE report. In fact, that number at 29% now, that's down from 40% the year before and 49% year before that, 53, et cetera. So tight U.S. stocks and also tight world stocks when you look at the world isolated from China. China, again, as we've talked about a number of times, wanting to maintain for food security purposes large stocks of wheat. But when you take that out of the market and figure that they're going to isolate that, they're not going to send it out and trade, that you're down to 21.1% stocks use, and that's the lowest, at least since back to the major drought, the 2012-13. So we're as tight as we've been for a good number of years in terms of, I guess, what you might call tradable supplies. Okay. The trends in the wheat contracts way stronger than we see in corn and soybeans right now. Yeah. The D's contract, again, be entering not long, that'll be entering the delivery period. We'll roll over to the March for our focus, and elevators will too. Anyway, the point is that from a low of about 580 or so back in July, by early August up to about 750, it come back down to 675 by early September. And since then, in I guess classic futures tortured path higher, we've now been moving at a rate that's been actually accelerating as you look at the actual price patterns since early October, to where now have closed 827 and a quarter, yesterday, had gotten up higher in the day up to about 850. And we try to follow and watch some key measures of momentum in the market, et cetera. And for the Chicago wheat contract, which has a lot more volume to it, it has a relative strength index of about 68. Well, if you're at 50, you're sideways in the market. As you go to 55, 60, 65, et cetera, you're showing a lot of momentum and upward movement in the market. Well, it's at 68. Mm-hmm. And just for comparison, the corn futures contract trading at about 54, so slightly positive. For the soybean contract, trading at about 46, slightly negative. And here you have the Chicago wheat contract, the bellwether contract for the U.S. complex, trading at 68. So strong movement. And Eric, you and I have talked about, again, why. We know things are tight in terms of anticipated stocks to use, but the pace of exports for U.S. wheat so far has been okay, but really below the standards needed to meet these USDA projections, mm-hmm. which raises a little bit of caution. We've seen this in the past where if we've had lofty expectations for exports and end up and don't meet them, then eventually there's a readjustment in that balance sheet. Because we work in Kansas and because we're for U.S. wheat farmers, we hope that doesn't happen, but there is a risk it could. And where the main issues are happening is, again, having to do with that world number and the world situation. Russia talking about increasing export taxes, more uncertainty about the recovery of Canadian hard red spring wheat production. And actually, I understand from talking with people in the wheat industry that we have sizable quantities coming out of Australia, but excessive rains have hurt the quality so badly that the food quality wheat coming out of there has tightened up quite a bit.
Domestically as well, Dan, we're worried about dry conditions broadly in winter and spring wheat country. Is that factoring in at all?
Well, I think it is. How much does the market pay attention to how dry things are right now? It adds a tick of uncertainty. It holds prices up, and it's hard to argue with futures closing at 827 that it's not a big factor. But to move on higher from here, I think we have to get through the winter, break dormancy, and have that much more proof that we really are going to have a crop shortfall in the hard red winter wheat area. And all the time we're doing that, we'll be looking up to the weather maps to the north. By the way, they're still dry up into the hard red spring and durum wheat areas up in Canada and those northern states. You still have 85-90% of the durum and spring wheat areas still in classified drought areas. So that has to change. If you try to put wheat in a nutshell, we've got tremendous prices. Cash prices, again, in major export locations in Kansas, Salina, Topeka, Hutchinson, all at 822, and those are the highs on the Thursday closes anyway that we'd seen last week as well. So tremendous prices. And new crop bids running 775, 799, the highest one in the Topeka area for new crop harvest in July. And the weakest of them in Colby at 781. So just stupendous prices, but again, a ways to go before we would harvest any bushels.
Also noteworthy in the markets this week and at the locations around Kansas in particular, grain sorghum cash bids are quite healthy right now.
They've come back, and given the dependence of grain sorghum on exports to separate it from corn, that seems to be tied in with grain elevators pulling together packages of grain, et cetera, to move. We had a very good week of grain movement a week ago, the week ending on the 11th of November. Again, a week ago, 2 weeks ago, we had a tremendous week, not so much last week. We'll see what they do this week again. But that's the herky-jerky nature of grain sorghum exports. And again, here in Kansas, when we look to the central Kansas area where the major elevators are and see a jump up in cash prices for grain sorghum, and in particular, you just wonder about filling trains and trying to pull together packages of grain that can move. So, and you sure see that now in Salina, in Topeka, in particular, Hutchinson to some degree, pretty strong price in Colby, and here we're saying $5.98 in Colby. Garden City's still setting at $5.88. Well, that's a great price too, but it is a dime lower than where Colby's at. And of course, Southeast Kansas, Columbus as a representative at $5.73. So still all great prices, but the export-oriented locations for grain sorghum have all that much stronger of a price.
And soybeans just can't seem to get any traction, Dan, and a lot of that has to do with disappointment on the export front.
Yes, it does. Now, we've been having some pretty decent weeks. Last week, for the week ending the 4th of November, just a stupendous week of exports, 126, I think, million bushels. This week, we're back to 86 million bushels. Sales are still sitting very good. We're about 11 weeks into this marketing year. It's about 21% of the way in, and you're looking at forward sales of 62% of the USDA's projection of 2,500,000,000 bushels. So the prospects are there, but the actual movement has, I guess, according to the market, not held up to expectations. So we're 21% of the way through the marketing year, about 30% of the way shipped in terms of the USDA's projections. And I think if anything, we're waiting for China to come into the market in a big way and really move things around. And so far, there's been rumors of that, but not in major quantity yet. So much depends on just when they come to the market aggressively and what's happening back in their own country in terms of crush. And you've got electricity supply issues affecting all that too. So, but to date, factors haven't come together to drive them to come in super aggressively into the U.S. soybean market. And because of that, we see soybean futures at still great levels, historically speaking, but January at $12.65. Well, again, we've seen $2 and $3 higher than that in recent history. And I think our reference point benchmarks expectations are more along the lines of what we'd seen around June 1st when we had futures up to $14.75. Well, we're not there now, but these are still good prices.
It just feels, Dan, like the markets, broadly speaking, and maybe the exception is wheat to a certain extent, but the markets have plateaued. Do you see it that way?
That is a great question. I think that if we're anticipating that the markets could go higher, we tend to take it there quickly and then hold it there until we see whether what we anticipated holds true or not. So in the situation we're in now, on the backside of a rally that happened a year ago, I would tend to think we run up and try to see if these things that we anticipate, what we're afraid of that could happen, whether they actually come about or not. If they don't, then we tend to go sideways to lower. Of course, following the dictums of our former colleague, Art Barnaby, who always said, well, I've sold my grain, now the market can go up. So here, now I've made my statement, and now the market will probably respond accordingly. But I tend to think we're anticipating pretty strong markets, and now we're waiting to see if it works out. So that's kind of a recipe for a sideways market, and that you'll have to really surprise hard to get much out of it.
Producers, keep up on Dan's latest thoughts on the markets in the notes that he posts each week. agmanager.info is where you'll find those. A good weekend to you, Dan. Thanks for joining us once more.
Thanks, Eric. Take care.
K-State Research and Extension grain market economist, Dan O'Brien. You're listening to Agriculture Today. This next segment of Agriculture Today is originating from the K-State Swine Day 2021, held yesterday here at the university. Of course, a great crowd turning out once more as they hear about research ongoing at K-State and elsewhere. And they heard about, those attending Swine Day yesterday, an initiative that's been taking place the last couple of years. It's now building some steam. It's called the U.S. Swine Health Improvement Plan. And one of the catalysts behind it is with us now. He's with Iowa State University, the director of operations for that university's Veterinary Diagnostic Laboratory. And, in fact, somebody who holds a degree from Kansas State University, Rodger Main. Rodger, welcome back to Manhattan, first of all.
Yeah, good morning, Eric. So my background and really life has been centered around, been involved in pig production really through the entirety of my life, from growing up on a farm and so on, and then I worked in as a veterinarian in the industry for 13 years, and during that time did a PhD down here at my friends at K-State, which was a great opportunity. And then for the last 13 years, I've been serving as a professor and director of the Veterinary Diagnostic Lab at Iowa State.
Tell us about what has come together here, this Swine Health Improvement Plan, launched as a pilot project here a little over a year ago. Is that the time frame?
Right. So we just really started to pull this thing together last fall. So it was the fall of 2020. And this is a very highly collaborative USDA, VS, or Veterinary Services sponsored a pilot project across 4 different Midwestern universities that are kind of the core moving this thing forward. And what it really centers on is standing up this U.S. Swine Health Improvement Plan that's being modeled after the U.S. poultry and egg industry's longstanding National Poultry Improvement Plan.
And can you outline what that plan was all about and its components? Because that's the path that your plan is following.
You bet. So kind of a little bit of the background is that we did a case study on NPIP, this National Poultry Improvement Plan. It was a 12-month case study in 2018 to 2019 over that summer. And what we really appreciated is the structure that it brought to bring industry, state, and federal partners together with a common goal towards safeguarding, bettering, and certifying, in their case, the health of poultry. It has a long history dating back to actually 1935 Okay, so it's been around for 85 years, but its core was centered on certifying breeding poultry of being free of said vertically transmitted diseases. Okay, that's continued to grow and expand over time. But then in 2004, and then officially in 2006, they established what they call an H5H7 avian influenza monitor certification that's held by something greater than 99.5% of all U.S. commercial poultry operations. So all commercial scale meat type chicken, meat type turkey, and commercial egg layer. And the whole premises around that was to give them a proactively and established and officially recognized system, officially recognized across states as well as internationally, to demonstrate evidence of freedom of H5H7 avian influenza. And that's really been their foundational system to have in place that's enabled ongoing interstate and international commerce in times of avian influenza events of significance in this country, either low path or high path.
So your idea here was to mimic that, but in the case of swine, target a couple of obviously high-profile disease incidents that we worry about constantly in this industry.
That's correct. And that's where really the basic premise of this pilot project centers on establishing what we're calling an ASF, CSF, or African swine fever, classical swine fever, monitored certification of U.S. commercial pork production operations and slaughter facilities that's really modeled after the basic tenets and premises of that H5H7 avian influenza monitor certification of commercial poultry.
When you talk then about certification, what are the components that must be satisfied to lead to that status?
Right. The core tenets around the certification center on standards for traceability, biosecurity, and disease surveillance. And the thing I think that we took the most out of the case study and really what drove us to this pilot was the derivation of how such standards are established, how such standards are determined. In that we had our first Congress of stakeholders from across 28 states that participated. So each states were allocated a certain number of delegates based on the size and scale of their commercial pork industry, but with all segments of the industry being represented, both commercial scale, non-commercial, smaller producers, as well as the slaughter facilities. And so it was a great turnout. We had 28 states represented, over 230 voting delegates that were there. And really, that's the Congress that comes forward to determine what the program's content and direction and standards associated for certification.
You're pointing to this is a living process, so to speak. It will be in perpetual evolution.
That's correct. And so it's a circular kind of continuous improvement model. And so in this pilot phase, we're actually convening a conference every year. The NPIP, their similar Congress meets every other year, and we would look at should this thing take off and become an officially recognized and ongoing endeavor, a similar model. But during this pilot phase, because we're just in the startup mode, is that we'll be holding the second Congress that, again, will be held to further determine and further, there was a number of items. So it's like in the first Congress, we established what are the initial program standards. Okay, and there had been a series of technical committees that had drafted standards that were brought forth for consideration, discussion, and debate. And then we're ultimately said, okay, here's the year one standards. And then there's a number of projects and efforts going on over this coming year that are looking to further investigate, that may further inform additional modifications and so on as the program evolves in the coming year.
You're still early in the going here, but what's your read, Rodger, at this moment about producer buy-in? It's a voluntary program. What feedback are you getting along that line?
Right. So I would tell you is the feedback that we've been getting from producers and slaughter facilities from across the country has been a very high degree of interest, a very high significant recognition of the need to help, because this is really about a certification to support trade. Okay, in the event of an introduction, this sort of thing of how do we get there, how do we get back from there, and how do we have a proactive system that demonstrates freedom of disease across areas, regions, and supply chains. And as some, like Bellwether, this first Congress, and not knowing going into it exactly how all that's going to go. But we were overwhelmed by the number of states that had expressed interest, and we had, from across the U.S., we had over 90% of the delegates that were allocated were used. So people showed up. And I would say one of the most common themes that we've heard in feedback from the meeting, after the meeting, was it was probably one of the meetings that had a very comprehensive involvement, engagement from all segments of the industry: producers, large, small, and slaughter facilities, state and federal animal health officials, all in the same room, all having a voice and around a common purpose about how do we work together to help better our systems of safeguarding the health of our U.S. pork industry.
Well, then, any thoughts on when this may move beyond the pilot phase and become fully instituted?
Right. So, again, this is a pilot project because one of our core efforts around this and objectives is to give U.S. pork industry as stakeholders a firsthand experience of what is this, how does it work, is it something we need or not, all of that. And it's set up, the initial is a 2-year pilot. The feedback has been very, very good and would likely extend the pilot, for another 2 years should there be interest, again, and that'll all be determined by stakeholders, of course. And also to ramp something up to be that's an officially recognized, that carries a USDA seal, stamp of approval, ramping something like that up takes some time, both at a practical level as well as at an administrative level within our USDA and state partners.
You can say the foundation has been poured. It's a rather exciting development in advancing the cause of swine health.
You bet. And we've just been very appreciative by the tremendous support and feedback that we've been getting from industry, state, and federal partners in this initiative. And we're looking forward to all learning together as we move forward through this pilot phase.
Lastly, you shared the latest on the plan at Swine Day. Is there someplace interested individuals can go to find out more about it?
You bet. I would add 2 things, is that there's the website is Swine Health Improvement Plan.com. And then also, if you have an interest to discuss with your state-level pork producer association and or your state animal health official.
Great concept, and glad to see that it's off and running quite well in a pilot phase yet to note. Rodger, thank you for not only sharing these thoughts, but presenting same at the Swine Day here at K-State this week.
Thanks, Eric. Appreciate the opportunity.
What he's talking about there is the swiftly emerging U.S. Swine Health Improvement Plan. Rodger Main is his name. He is the Director of Operations for the Veterinary Diagnostic Laboratory at Iowa State University, and once more brought to K-State to share more on the plan at Swine Day 2021. We'll have more for you shortly on this Agriculture Today. This Agriculture Today comes to a close on Kansas agricultural weather. Of course, we cover that every Friday right here. Along with us once again from the Weather Data Library here at K-State is K-State Research and Extension meteorologist Chip Redmond. Well, Chip, one thing we can say for sure now, everyone in Kansas has had their hard freeze as per this past week.
Yes, very much so. The first hard freeze happened for much of the central and eastern part of the state. That happened on Saturday morning, and we had temperatures as low as the low 20s. And then the morning of the 18th here on Thursday, we also had colder temperatures even. We even had a few single digits pop up in the northwest. So 2 good bouts of below normal temperatures and freezing temperatures as well.
The transition to winter is on. Bring us up to the moment on the drought monitor in the state. Our moisture was pretty limited this past week, was it not?
Yeah, we had some very light rain occurred northeast Kansas and southeast Kansas, but really 1/4 to 1/10 of an inch or less. And so, our precipitation as we go into winter, we're on a downward trend for that as well. We're averaging anywhere from 1/10 of an inch in the far northwest and the western part of the state to about 3/4 of an inch in the southeast. So we're not adding as quickly to deficits when we have weeks with little rain. And so therefore, you're going to see changes in the drought monitor be a little bit slower to occur. Now, I say that as the updated drought monitor that came out this week did have some changes. We saw just to focus real quick on the Northeast, where that band of heavy rain fell in Potawatomi and Nemaha counties. We trimmed back that abnormally dry, and so there's less abnormally dry conditions. But focusing on the West, we saw abnormally dry expand in the Southwest and the West, as well as severe drought conditions and moderate drought conditions in the Northwest expanded to go into Colorado. So overall, we saw a really windy, dry period kind of come to an end at the beginning of this past week, and we saw some high evaporative rates as well as bigger moisture demands for things like wheat. I know there's some photos out there we just got from the Northwest of some really poor wheat stands due to the lack of moisture. Mm-hmm. So that is starting to add some more drought in that region as well.
The forecast, a modest warm-up appears ahead for next week, but we're to remain dry.
Yeah, it's dry as the headline. I don't really see there's a small chance of precipitation during Thanksgiving week in the western part of the state. I see some wintry precip, but other than that, it's dry probably into December. And by dry, I mean almost no moisture at all. We will see some temperatures that are warming up into the weekend, and then we have another cold front that's going to arrive midweek next week that'll bring that moisture to the west, which will be very little. But it'll bring below normal temperatures. We're kind of ebb and flow with these frontal systems, and then we're going to start to build back up warm to be above normal temperatures probably into the beginning of December. And then the December outlook just got released Thursday, the 18th, and that is for warmer than normal, favors warmer than normal conditions for the entire state with the highest confidence in the Southwest. Mm-hmm. And then precipitation-wise, equal chances of above to below normal precip with a little bit of a favor along the Oklahoma border of drier than normal conditions. And I will say this weather pattern we're in, we're going to have a brief break in it next week, but with northwest flow, we typically stay dry, and it looks like we keep that flow into mid-December.
Settle in for these conditions. They appear to be around for a while. Chip, we won't visit again until after the Thanksgiving holidays, so a good break to you and yours. We always appreciate it, and looking forward to our next discussion of Kansas agricultural weather. Many thanks to you.
Sounds great. Thank you.
That is Chip Redmond, Research and Extension Meteorologist here at Kansas State University. Our time's away once more, so thanks to you for being along with us, and do enjoy your weekend. Eric Atkinson for Agriculture Today over the K-State Radio Network.